to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Everywhere you look, things are getting more expensive. So at Consumer Cellular, we're lowering the price for those 50 and up. Now you can get unlimited talk, text, and data for $30 a line when you buy two. That's just $60 a month for 2 unlimited lines. So if you're 50 and up, make the switch and save. Come on, you've earned this. Call 1-888-FREEDOM or visit consumercellular.com today. Requires 2 lines of service, age validation, and credit approval, subject to system and area limits, taxes, and other fees apply.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for an example, is in there. Then you get into parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Wednesday here on the Financial Exchange is Chuck, Paul, and Tucker with you. Paul, is Paul short for anything?
No.
Still no.
You've done this like 100 times.
I know. So I do it. I do it like
Christ.
every few months, just because I know that it gets under your skin for some reason.
Because it's just regurgitated material.
You generally got pissed there.
I know. I know. I apologize for starting the show off on that foot. I didn't mean to. Well, I meant to do it to you, but in hindsight, I shouldn't have. But I pull it out of the bag just to keep you on your toes every now and then.
Quote me on that.
Thank you, Paul. In any case, let's talk a little bit about what we're seeing in markets right now. There's a piece here from Barron's. It's titled, Stocks Have Weathered DeepSeek and China Tariffs, Market Resilience is Being Tested. And ultimately, look, we've talked about for the last 2 years, Paul, going on like almost 2.5 now, that despite everyone wanting to proclaim an imminent recession, this has been a resilient economy and as a result, a resilient market. So I think that when we look at this in terms of the resilience that we're seeing in markets, ultimately it boils down to two things in my opinion. The first is the AI industry in the United States and the spending and the growth that's happening on that side, because that basically through last July, that was market leadership.
Right.
The second piece is consumer spending, which has consistently been robust, and in particular in the last 5 or 6 months has been really, really good, despite concerns about, the unemployment rate rising in the third quarter of last year. We never saw any impact to consumer spending to the downside, and it showed up in GDP, it showed up in earnings reports, it showed up everywhere. And so I think where I get to on this is, look, both of these things potentially over the next 6 to 12 months are a threat to each of those things that have carried the U.S. economy. If it turns out there is a way to build a better mousetrap that doesn't involve buying exponentially more chips from NVIDIA each and every year, we got a little bit of problem with market leadership.
Right.
if it turns out that tariffs on imported Chinese goods start changing consumer spending habits, and if we start seeing people adjusting, how much they're spending, in different parts of the economy, could be an issue there. To this point, we have no data suggesting any of that because both of these things are new in the last 2 weeks.
Yeah, I think really what's happened is while these threats have loomed and caused short-term, I'd say market volatility, marginal volatility. If you look back at the VIX, we were talking about this a little bit on yesterday's show, it's not as if it's spiked as significantly as some of the periods of time that we saw in August and early in the fall in terms of we say the VIX, the fear gauge to just sort of assess what investors are seeing out there. And part of it is because those two things that you mentioned, consumption has been resilient. These tariffs, while we've talked about them a lot, oftentimes outside of the Chinese ones, which did go into effect, there has been a lot of back and forth, and they haven't been instituted and felt the financial ramifications of those. So that's why it seems as if the market has held ground. We'll talk a little bit about DeepSeek and AI because that really ties in with some of the stories that we're going to cover on some of the earnings reports. But the short point there, before we go into more detail, would be there is, after that initial report got published, some skepticism as to, and there's been some significant research done to point to the fact that while some of the training costs may have been lower on the model for DeepSeek, there still was a significant amount of capital investment to fund that initiative, and that ties into NVIDIA and the need for its GPUs, which still seems to be the case, and we'll get into that.
And when we talk about markets and their resilience, ultimately it boils down to, hey, what do future earnings look like, and what's the likelihood of hitting those future earnings projections? And there have been, again, a couple questions here, but you don't know anything 2 weeks after either of these things happen, the imposition of additional tariffs on China or the revelations of, DeepSeek's new model. So I'm of the opinion it's probably going to take 3 to 6 months on both of these to figure out where things go. And yeah, there's, potentially some issues on both of these, but more often than not, you say, okay, now that we know about these issues, we can figure out ways around them. The consumer spending one is one, though, that if it becomes somewhat of a self-fulfilling prophecy, and that if, consumers start pulling back because they're nervous about something, then that results in companies paring back their expectations, maybe laying people off, and then you have more. So that's why when you see unemployment go up, it doesn't move up slowly over a period of 5 years. It moves up quickly over a period of 1 to 1.5. So there's nothing that we're seeing in any data right now that is cause for concern, but we've got some new developments that have come into play over the last couple weeks, and we'll have to see how they play out over the next few months. I know that's kind of the boring thing to say, womp womp, but look, that's kind of what I think our show does, is when everyone freaks out about something, okay, most of the time you can look at it a little bit more rationally, and it's not that big of a deal. So
the market's up 2.7%. The first 2 months of the year. Yeah, year to date, off of...
Is that good?
No, what I'm saying...
I'm with you.
It's like off the heels of a 23 or 24%, gains last year.
Right.
And so I'm not to you specifically, but to some of the articles that we cover, there have not been losses. There's been some volatility, but I think it's important to point out that we had a great year last year from the market. And
great 2 years.
Yeah, 2 years. Just outstanding years. Our valuation's high. Absolutely. That is a concern that looms out there. There are these other things. But to date, even though there's been ups and downs, we are still up. I think that's worth pointing out because the doom and gloom headlines will get you from time to time.
This is going to sound kind of weird. It's not going to make sense initially, but markets have been really resilient, even though investors have not. And what I mean by that is investors today are soft. We go through a 3-day sell-off, and you get the CNBC markets in turmoil, Chiron that pops up. It's like, guys, did we not all live through March of 2020? Did we not all live through all of 2008? Did we not live through any of these things? Market volatility happens, and if we're going to throw a fit every time the market goes down 5%, then
there's going to be a lot of fits.
A lot of fits.
That's what it feels like. It's just a lot more of these stories where there's not actual decreases to back some of them up from a stock market self perspective. Not to say there couldn't be, but
you get this piece here. DeepSeek and tariffs have roiled the market. Okay, let's just be clear on something. DeepSeek, to the best of my knowledge, the first time it impacted markets at all was last Monday.
Yes.
Correct?
Yes.
Now, last Monday, I did a little bit of research on this just to make sure. Last Monday was January 27th. On January 27th, the S&P 500 closed at 6,012. 6,012. Mm-hmm. Which is, today, by the way, we're at 6,014. So the tariffs, which have been talked about since then, have moved markets less than 0.05%. And the S&P 500 right now is at the same place it was at, by the way, back on November 8th, 2 days after the election, when it hit 6,012. That was the high it hit that day. And at the exact same places then. So it's been 1, 2, 3. Sorry, I did have to do some math there. It's been 3 months now since then, and markets have not budged. Does that strike you as a roiling?
No.
I am unroiled. I am unroiled. And, you know, for people who are like, well, it's been a bumpy ride to get here, the S&P 500's low is 57.73 in that time. Okay? If you do the math, and I did, that's a 4% drop from right here. Not even a 5% drop, a 4% drop. So the S&P has been worse, down 4% on one day, by the way. That was on January 13th. I don't know what happened then, but that's when I was trying to think, like, what did we go through?
I don't even remember that.
I don't even know. But the S&P 500 has been 4% lower than this and about 1.5% higher. It's been in a 5.5% range for the last 3 months. Roiling markets?
The 13th was the jobs report. Good news, bad news.
Okay.
Sure. Still don't remember it. You know, it's like, doesn't that feel like that was just ages ago at this point?
January was a long month.
Like the last week and a half, it's just been every day we've been, you know, moving from DeepSeek to tariffs to, well, I don't know what we're going to see tomorrow. You know, like tomorrow it's going to be like all the soup in the U.S. is bad or something. Like it's wild right now. So let's take a quick break. When we come back, we did get some tech earnings yesterday. Let's talk about Google because they had some notable things on that AI theme. And so we'll discuss that when we return.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
In retirement, healthcare coverage is likely to be one of your largest concerns. This is Mike Armstrong from the Armstrong Advisory Group. Medicare provides coverage to 65 million Americans age 65 or older. And if you're closing in on that age, understanding how Medicare works is not only important for you individually, but for your family as well. Medicare is made up of 4 parts, A, B, C, and D, and each of these parts provides specific coverage. Our new guide is called Understanding Medicare, Essential Questions Answered, and in it, we'll explain your eligibility, how to enroll, and of course, the costs. Call us today at 800-393-4001 and request your free guide. There are many different elements of Medicare, and this guide will help educate you on all of them. Call 800-393-4001 or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Alphabet, the company formerly known as Google, reported earnings after the bell yesterday. And big thing is they missed on revenue. Their guidance was a little bit light. And they also guided that their CapEx was going to be 25% higher than they had previously estimated. And so as a result, Google stock or Alphabet stock or whatever we're calling it these days is, I say these days, didn't they rebrand it like 12 years ago now or something? But
Meta still is taking a little time on
Meta
this.
I can at least get behind because there it's at least, hey, we're making a concerted effort to try to build the metaverse, and it's not working, but we're
haven't heard check-ins on that.
We're committed to the bit, like I at least they're spending a ton of money each year.
Yep.
Google is not trying to write an alphabet.
No.
And it's just a horrible name anyways. Your name is Alphabet? Like what does that even mean? Like you're a bunch of linguists? Like what's happening? So, when spending goes up and revenue comes, in light, generally you see your stock go down. But what makes this kind of confusing to me is Meta gave the exact same quarter last week. Their revenue was light, their guidance was light, and their CapEx was higher than expected, and Meta stock didn't get hit. And so I'm just trying to reconcile these two things because this is what I would have expected to happen to Meta stock. Like down 8 to 10%. And instead, I think it was up like 2% after they reported earnings. And so I guess my question is less about what happened with Google. Like, I get it. They're trying to spend a bunch of money on AI and their core products are just, not growing gangbusters anymore. I guess maybe the one thing here is specifically Google's cloud.
That's where I was going to go.
Think that's
yeah,
it?
I mean, that's the only. Not the only. That is one of the structural differences between Google and Meta in terms of where they derive revenue from, where the cloud sales growth was 30% in Q4 from a year ago. It was in Q3, that same sales growth that they saw from cloud was 35%. So that coming in lighter, it seems like is the only thing to point to in terms of why the stock, I believe it was off 7% earlier today. I don't know if that is 8 now. Why the stock is off, about 8.5%. At the moment, they were looking to see a little bit more growth there. They're running into a similar problem that Microsoft is, that the supply is not requisite enough to meet the demand for cloud growth. That was one of the things that they did mention over the course of the call. Advertising revenue has been a little bit more muted, so it seems like that's where a lot of the scrutiny has been is on that cloud computing, which Meta doesn't, delve into those markets. So that's perhaps why Google's taken on the chin a little bit more. I did think that the CapEx piece sort of reiterates the piece that I was talking about earlier in the show, this idea that the initial blowback from DeepSeek was a close to 20% sell-off in NVIDIA stock, with concerns that perhaps not as many of their chips, GPUs, would be required to do this type of AI computing and to run all these models. You've got Meta coming out saying they're going to spend, Meta $65 billion. Microsoft is going to spend $90 billion this year in capital expenditures, and Google, as we mentioned, is going to spend 19% of its revenue in 2025, about $75 billion on CapEx. So all of these are the biggest customers out there. We talk about that a lot, right, Chuck, of NVIDIA, reinforcing this idea that they're going to continue to spend. And I did see that I think NVIDIA was up at least 3.5% today, which could be not, 3% could not be directly tied to this, but it does seem like the more we delve into that DeepSeek story, the infrastructure costs did need those GPUs. Now the training costs, that's another story. Perhaps those could be a lesson burden, but certainly seems to be continued demand for the GPUs to at least build out these models.
You mentioned NVIDIA. On the other hand, AMD, who is also a chip maker, the vast majority of their revenue and profits not derived from AI. They do a whole bunch of different things. But they do have, an AI business that they are trying to build. And they gave a pretty disappointing outlook in terms of their data center business. When you hear data center in this context, it's largely talking about AI. And they said that the division will grow by a, quote, strong double digits this year. But obviously you've seen, NVIDIA's revenue from that area doubling year after year for the last couple of years. And so AMD stock down about 10% in trading today. And this is, one that has undergone a sharp reversal over the last, 9 or 10 months right now. This was a stock that was trading at $210 a share on March 10th of last year. It's $107 right now. So it's been cut in half basically over the last 10 months. And look, I'm not everyone's saying this, but if you think it can't happen to NVIDIA, it can, and it's not to say that it will, but there was all this optimism that AMD was going to capture this business, and they just haven't to this point. Maybe, there's going to be more pie for them to eat up, and maybe they'll be able to figure out how to capture it. But AMD, it's hard to say that they're struggling when you're still talking about the growth that they're seeing. Revenue's $25 billion, net income is a couple $2 billion, free cash flow's positive. Their margins, here's the big difference between them and NVIDIA. Their operating margins are about 5.5%. NVIDIA's are 62%.
Yeah.
Like that's the whole ball game. Is NVIDIA is basically just printing profit because no one else is able to charge the prices they do for what they're putting out, and that's the whole ball game.
But to emphasize your point, when you have margins that large in an area that
everyone's
there's
come after it.
Exactly. There's constant innovation and there's a constant drive to lower costs as much as possible. And we saw that with some of the trading model stuff. There are people and other companies out there, some that we just spoke about, Google and Meta and others, that are they're chasing after that, and the competition is going to be steep. NVIDIA had a decade head start basically in this GPU business, but the longer these margins are in place, like you said, the more competition's coming after them for those margin dollars.
Yeah, I know that Microsoft has announced they're trying to develop some chips in-house.
Google has the TPUs.
Yep.
And there's CUDA is one of the development models that NVIDIA has to strengthen its moat. There's going to be challengers to that too.
Yep. The company that would be kind of interesting there, Apple's done a lot of work in the last decade building out their own silicon for, phones and stuff. Part of me wonders, hey, do they ever want to try to get into the business of designing chips for AI, even though they're not, developing the AI platforms? Be kind of interesting. Quick break here. Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The markets are in negative territory as Wall Street reacts to a new flurry of fourth quarter earnings, including disappointing results from Alphabet. At the moment, the Dow is down by only 15 points. S&P 500 is down about 0.25%, and the Nasdaq is off over 0.5%. Russell 2000 actually up over 0.5% at the moment. 10-year Treasury yield down by 8 basis points now at 4.42%, and crude oil down about 1.5%, trading just above $71 a barrel. Alphabet down by over 8% after the tech giant reported a slowdown in Google's cloud computing sales, resulting in a drag in the company's overall revenue growth to its lowest level since 2023. Sticking with tech, where AMD is down by 10% after the chipmaker posted a big jump in revenue in its data center business. However, the results came short of analyst forecasts. Meanwhile, Disney posted impressive quarterly results this morning, where the media giant topped street expectations for revenue, net income, and streaming profits. Disney also had a strong box office showing, with Moana 2 lifting its studio business during the quarter. More on Disney in the second hour of the show. Elsewhere, Uber down by 8% after the ride-hailing and food delivery company's quarterly operating income significantly fell short of expectations. Ozempic and Wegovy maker Novo Nordisk forecast sales growth would slow this year, but posted stronger than expected net profit and sales for the quarter. That stock jumping by nearly 5%. And Chipotle shares down by 2% after the burrito chain cut its sales outlook for the year. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we're now joined by Todd Lutsky from the law firm of Cushing & Dolan. The segment is Ask Todd, and it is your opportunity to ask Todd your estate planning questions. Phone lines wide open right now at 888-205-2263. We can normally get through about 2 to 3 calls. So, if you got a call, make sure you get in early so that we can get to you. 888-205-2263. Again, this is your opportunity to ask Todd Lutsky your estate planning questions live on air. 888-205-2263. One more time, that number is 888-205-2263. Mr. Lutsky, how are you doing today?
Never better. How are you?
Pretty good.
Uh-oh.
I got a question for you.
Yeah?
What do you call a monk who walks everywhere in bare feet, has poor bone density, and really bad breath?
That's a lot of things. I can't even think of all those. I can't even follow this, so I'm just going to say I don't know.
A supercalist fragile mystic hexbihalitosis.
Wow.
I know.
That's good.
It's wild.
That is wild. I can't even remember that.
Let's talk a little bit about estate planning. When we talk about someone who's maybe at the beginning of the estate planning process,
yeah,
probably a little bit intimidated, how do they decide which estate planning tools are actually the right ones for their specific situation?
So a couple of things. When we talk about it, I always like to, this is why we call it, the guide is back to the basics, right? It's thinking about how do we get started. I would say the very first thing you should do is take a look at your assets and value them. Figure out what it is you own and what you roughly think it's worth, because it's the value of the estate that really drives the type of estate plan that you're going to do. Okay, so let me try to expand on that a little. You know, when I say how you own it, right? If you own it, it's an asset. It doesn't mean it's a probate asset. It just means that it's a gross estate asset. Very different. You could have 0 probate assets, but all are still part of your gross estate. I think the bigger question is, when I say value it, intuitively, what am I valuing, right? What is included? Not everybody thinks about this, right? But obviously your bank accounts and your brokerage accounts, that comes to mind, right? Because it's money, and you say, yeah, I feel it, I see it. You know what they don't think about? Real estate. They say, oh yeah, I got $1 million home. Oh, but I don't feel like I'm worth $1 million because it's real estate. You know, I don't count that. Oh, but the government does. So you got to count that as an asset of the estate. Another thing people don't think about, Roth IRAs. They'll say, oh, you know, Roths are income tax free. Well, yeah, they are, but they're estate taxable when you die, so please count them. You know, even regular IRAs, they are, estate taxable when you die, so please count them as part of your estate. And you know, one of the other things that almost everybody forgets, life insurance, right? Oh, life insurance, isn't that income tax free? Well, it is, yeah. When you die, if your spouse gets it, it's income tax free. Never mind a spouse. Whoever gets it, it's income tax free to the person who gets it. But the government values everything right when you die. The moment you die, that's when they value it. Because you might say, well, you know, I got this term insurance policy and it has 0 cash surrender value today because I'm living. The next day I die. Well, it's worth $1 million if that's the face value. That's when the government values it. So now, one item, right? You could be sitting here saying, well, geez, I'm not worth $1 million. Oh, wait, I have $1 million life insurance policy. You're all of a sudden worth $1 million and you haven't talked about any other assets yet. That one asset could put you at $1 million.
Talking with Todd Lutsky from the law firm of Cushing and Dolan. Again, the segment is called Ask Todd because it's your opportunity to ask Todd your estate planning questions. We do have space on the phone line still at 888-205-2263. That is the number to call to ask Todd your estate planning question live on air. Again, that number is 888-205-2263. We're going to take a quick break right now, but when we come back, it's going to be right to your calls with Todd. That phone number is 888-205-2263. One last time, 888-205-2263. Your calls with Todd when we return.
Ask Todd with Todd Lutsky every Wednesday at 10:30. Only here on the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
In retirement, healthcare coverage is likely to be one of your largest concerns. This is Mike Armstrong from the Armstrong Advisory Group. Medicare provides coverage to 65 million Americans age 65 or older. And if you're closing in on that age, understanding how Medicare works is not only important for you individually, but for your family as well. Medicare is made up of 4 parts, A, B, C, and D, and each of these parts provide specific coverage. Our new guide is called Understanding Medicare, Essential Questions Answered, and in it, we'll explain your eligibility, how to enroll, and of course, the the costs. Call us today at 800-393-4001 and request your free guide. There are many different elements of Medicare, and this guide will help educate you on all of them. Call 800-393-4001 or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right. Let's get right to your calls with Todd Lutsky. First in the queue, we've got Mike from Drake. Mike, what's your question for Todd?
I have a grandfather who passed away. He left everything in his will. Basically, is coming to me and my wife.
Okay.
There's only one thing. There was a bank account that was left in a trust to my father-in-law. My father-in-law has now had passed before my grandfather had passed away. My grandfather had dementia. My question is, where will that money go now that was in that trust from Bank of America? Will that go back into my grandfather's estate, or does that go to my father-in-law who remarried another woman?
Okay, so wow, you just added a third factor that really threw me off. So let me just try to recap, and please try to help me when I ask you these questions. So the first one is you're the grandchild of the grandfather who died and left a will, leaving assets to you and your wife. So that piece is clear, right? We understand that went to you, right?
Yep.
Okay, that's not an issue. In addition to that, you said that your stepfather or no, your father-in-law.
My father-in-law.
Your father-in-law had a trust in place, a bank account in a trust, or did the account say in trust for?
In trust for.
So there was no actual establishment of an actual trust. It just simply is more of a designated beneficiary on the account, correct?
I believe so.
Okay, so it said in trust for who?
It would be his name, Harry.
No. So who's Harry's not the father-in-law, right?
Yes, he is.
So the father-in-law had an account and the account said, when I die, when father-in-law dies, the assets in goes to who?
When grandfather passed away, it would go to the trust was in the grandfather's, and when he passed away, it went to my father-in-law, which my father-in-law had passed away before my grandfather.
Okay, so now I'm just trying to get to the bottom of this, right? This is what's complicated about a lot of these questions. So grandfather, again, had one bank account that had in trust for father-in-law, correct?
Correct.
And father-in-law died before grandfather.
Correct.
Okay, and that account still existed when grandfather died.
Correct.
And so if it said in trust for someone who's deceased and there was no alternate beneficiary listed, then what happens is that would end up in the probate estate of the father-in-law. So, I'm sorry, not of the father-in-law. It would lapse as to the father-in-law. It would end up in the probate estate of the grandfather. So then the grandfather would die owning an asset with no beneficiary, but in his name. So his will should direct where that goes. So then that would end up going to you because his will said everything that's a probate asset goes to you. Remember, that item initially would not have been a probate asset because of the designated beneficiary listed. That's what keeps it out of probate. But if that beneficiary does not exist, then it's as if there is no designated beneficiary, so then it would end up a probate asset. Now his will says where it goes. So I think it goes to you you and your wife. If his will says, I leave all my probate assets to my grandson and his wife. So there you go. That's my answer, and I think that's where it's going to go, but you might have to do some probate work for your grandfather's estate. Folks, lots of stuff going on in a question like that. And again, I think it's partly because of the lack of planning that was done, right? If you don't do your planning, you run into these kinds of problems. Learn how to do your planning. Get the guide, Back to the Basics. It's basically a recommendation. It's my engagement letter to a made-up family with a bunch of assets. And it talks about the will, the health care, the power of attorney, the HIPAA. Really explains documents that we always give a cursory example of what they are. And it also, you can put your fact pattern with this and learn. In this one, it recommends an irrevocable trust or two for this family. See if this recommendation works for you. If not, learn by getting the guide. It will at least teach you how to begin thinking about getting your estate plan in order. One of my favorite guides, folks, 866-848-5699 or legalexchangeshow.com. Back to the Basics, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another caller for you here. We've got Steve in Bridgewater. Steve, you are on with Todd Lutsky.
Hi, guys. How you doing?
Great. You?
All right. Doing good. Hey, life estate. My mother had a life estate. I was the remainder man.
Okay.
She passed away in 2024.
Mm-hmm.
For cost basis, would I do a cost basis when the life estate was first created or when she passed away?
Do you still own the house or did you sell it?
Sold it already.
So you sold it. When did you sell it?
In December of 2024. She passed away in April of 2024.
Okay, so that's why I needed to know those specifics. So here's the answer.
Uh-huh.
One, the house, I'm going to expand so people understand, first of all, what is a life estate, right? A life estate is when you give something away, like a house, your primary residence, please don't do it with any asset, and retain the right to live there, right? So by doing that, retaining the right to live there, you avoid probate when she dies, and you've protected it from the cost of long-term care. I don't love the arrangement because there's a lot of negatives that go with it, but in this case, we don't need to go down that road because mom has passed already, so none of the negatives happened. So we now, though, by keeping that retained interest, that right to live there, that causes that asset to be included in mom's estate on the date of death. So in April of 2024, the full value, not just the value of the life estate, but the full value of the property needs to be included in her gross estate, not her probate estate. So it's not a probate issue, to determine whether or not an estate tax return is due. So on the date of death, April, what do you think that house was worth, Steve?
$450.
Okay, so if we've got a $450,000 value on the house, that means that the cost basis to Steve is $450,000. Now, between April and December, this may have increased in value. How much did you sell it for?
$440.
Oh, even better. So in this case, you cannot generate a loss. I know as much as you might be thinking, that's great. No, you can't generate a loss. But in this case, you will have zero gain to report on your income tax return, right? Because when you report it, you'll show the sale 440 or for 440. You'll show the cost basis of 440. And by the way, when you say you thought it was worth $450, if you sell it within 9 months of the date of death, roughly where you are, even within a year of date of death, it's the sale price that is the cost basis. So in this case, you've got to step up in basis. Your cost is $440. Your proceeds are $440. Your gain you report as zero, and you keep all the money. No federal, no state death tax. So that's how you calculate cost basis in a situation like this. And that's a great thing to have, folks. Whenever you're dealing with real estate, you always want to think about not giving away an asset like that and keeping it so that when the beneficiaries get it, in fact, if they don't want it, they can sell it and not have the capital gains tax to pay. And if it happens to be a rental property and you get a step up in basis and you keep the property, then you have the ability to offset the rent through depreciation over the next 27 and a half years. So wonderful thing, step up in basis, folks. Learn about step up in basis also in the guide.
Mr. Lutsky, thank you for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still plenty to come on hour 2 of the Financial Exchange. We'll talk a little bit about the latest in the potential merger between Japanese automakers Nissan and Honda. Also, Disney reported earnings. We'll dig into those a little bit more. Plenty of China news to talk about as it relates to tariffs, so we'll cover that a little bit. And then also, Waffle House. Something about them. You'll have to tune in order to find out exactly what it is. Whole bunch of that and a lot more coming up on hour 2. We'll see you in just a little bit.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have: how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Hour 2 of the Financial Exchange kicking off right now, and markets are pretty boring on the surface, but man, there's a lot moving underneath the hood. So the Dow's up 27 points, less than 0.1%. The S&P is down 10 points, less than 0.25%, and the NASDAQ is down 76 points, about 0.4%. So not much moving, when you look at it right off the bat. Under the hood, though, you talk about, some kind of the big stocks that people like to chat about. AMD's down 9%, Google's down 8%, Tesla's down 2%, Chipotle's down a couple after their most recent quarter, Apple's down 1.25%. On the plus side, Nvidia's up almost 4%, Walmart's up 1.25%, Starbucks is up 1%, so just kind of this wide dispersion of results. And this is kind of what's been keeping markets relatively tame and afloat the last few months is, hey, even with some of the big guys struggling, you've had some other companies that have kind of been able to say, okay, like we've got, something decent going on. And so markets are holding up right now. We've got the 10-year U.S. Treasury down 9.5 basis points to 4.418%. So yields moving down meaningfully in the last couple of weeks now. If you take a look just a couple weeks ago at where we were there, you had the 10-year yield, it was floating right up around 4.8%. We're sitting here at 4.4, so down almost 0.5% now in the last, call it 3 weeks since January 14th is when we hit that peak. So yields coming in a little bit. Mortgages still floating up right around 7%, though. This will probably bring them down to 6.95, somewhere in that ballpark. So Still not getting back down towards, where we were in the middle of last summer, but some improvement off that 7.25% range at least that we've seen there. Oil moving down 92 cents a barrel today to 71.78 on West Texas Intermediate. AAA national average for gas prices, though, moving in the opposite direction, up 1.8 cents a gallon from 310 and 7 tenths up to 312 and 5 tenths. So gas prices moving up just a little bit nationally, but quite honestly, we've just been in like this 305 to 320 range for the last, close to 6 months now, I think. And so no real movement in either direction there. Gold, though, continuing its strong run, breaking $2,900 an ounce for the first time now at $2,902 after it's up $26.20. So gold cooking on all cylinders to kick off 2025. Speaking of cylinders, see what I did there, Paul? Yeah.
I don't even have my mic, but
it was
I see.
That was good. So this story is messy, actually. The Wall Street Journal has this, the headline there is Nissan to reject Honda deal to create world's number 3 automaker. I have a buddy of mine who lives in Japan, and he had sent this to me last night, actually, like when it was reported first by Japanese papers. But the reporting on this afterwards there is Honda and Nissan initially were like, no, like we don't know where this came from. We're not, saying this. Nissan saying that they have various different discussions that they are underway with. They're planning to make an announcement in mid-February, and that they are, one of the options is that they may end up ending these merger talks with Honda, but this story's been kind of messy for the last 24 hours, so I don't know exactly what to make of it, but this deal was only announced. When was this originally announced? December 23rd. So it's been 6 weeks. And I have no idea what's actually going on here. But the reporting from the Wall Street Journal is, okay, Honda was saying that, we want to make Nissan a subsidiary instead of, kind of a merger of equals. But I mean, isn't that basically where this is going to end up anyways? Like, they're not on equal footing. Honda is the far superior financial company. They are the producer of way more vehicles. I don't really know what Nissan's end game is on this in terms of trying to extract concessions here. They don't really have a backup plan.
No, they have no leverage in this situation. Really, Honda is doing them a favor in a sense because of the situation that they find themselves in. Nissan had just laid off 9,000 workers in November and slashed its factory capacity by 1/5 to cut down some of the costs. If you look at their sales numbers specific to Nissan within the U.S. and China, they've lagged significantly over the last couple of years. So this idea that the offer offends Nissan is something that they're just negotiating from a position of very little strength. And it seemed like, I don't know if your friend commented on this, but it seemed like this was something that the Japanese government would like to see happen. Is that a fair way to sort of say that there may have been some prodding on the Japanese government side of things to influence Honda?
It has that vibe to it, but I don't know. Here's what I'll say. Nissan cannot survive on its own.
Right.
It's not big enough, and they are threatened in their two key markets. China, they are being absolutely destroyed in because of Chinese EV startups that are taking market share from everyone. And in the U.S., their bread and butter during the 2010s, back when, Carlos Ghosn was running the company, the Nissan Rogue was one of the best-selling small SUVs out there. They're getting their lunch eaten on that platform by the Honda CR-V and the Toyota RAV4. So if your key products in your two biggest markets are being, are seeing their sales decline significantly and quickly from their peaks, don't know what your plan is if you're an automaker, because you need to spend a lot of money to stay competitive.
The other piece that I hit on because of the prompting of the Japanese government is this idea that there aren't these huge synergies between the two companies here. They kind of compete in the same space, and to your point, Nissan is weaker in that space of competition. So what are you really getting from Honda's perspective with this merger? The idea that was mentioned is that they'd be able to go to suppliers and perhaps be able to renegotiate more favorable deals on supplies that they were purchasing for their cars, but it just didn't seem like a slam dunk merger. It'll be interesting to see what happens, but obviously some turbulence on the negotiation floor.
A little bit messy there. A little bit messy. Let's take a quick break here. When we come back, we've got trivia, and then we'll talk Disney earnings and Apple after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. By making a donation, you can support the Veteran Advancement Program, which offers permanent and transitional affordable housing to veterans and their dependents. The DAV of Massachusetts is the only DAV department in the country to lead a veterans housing initiative for single vets and those with families. Visit dav5k.boston to make a donation today, and make note for this year's 5K to be held on Saturday, November 8th. That's dav5k.boston. Time for trivia here on the Financial Exchange. The United States Postal Service said it will resume accepting inbound mail and packages from China and Hong Kong Post just hours after it suspended service from those regions. The USPS has had a long and storied history, beginning with the founding of the service in 1775. Trivia question today: who was the first Postmaster General? Once again, who was the first Postmaster General? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, do you know how many Postmasters General there have been in the United States?
I do not.
75, which is actually fewer than I would have thought. It seems like a job with a short shelf life. You know, it doesn't really seem like a place that you want to stick around.
Not an enviable position.
For that long. I'm kind of surprised that we don't have like 2 to 3 per administration. You know, there are some guys that served for, you know, pretty long periods of time, actually. I mean, again, kind of the standard is, you know, 4-year term is what we saw generally. But, you know, you look at this, and this one guy, Jesse Donaldson, served for 6 years in the 1940s and 50s.
He was a good Postmaster General, too.
The mail always came on time with Donaldson. That's what you knew. John Gronowski, 2 years.
He was all right.
Yeah, he was okay. He was LBJ's first Postmaster General. And let me tell you, the mail in 1964, not great.
Could have been better.
Just saying. Could have been better. I digress. Let's talk a little bit about Moana 2 and Disney. So they reported their earnings last night, and the earnings were pretty good, actually, I would say. It's a company that seems to be turning the corner and, you know, delivering at least a little bit more consistency among results. The stock's down about 1% today. It was up a few percent in after hours yesterday. But overall, it seems the story here is the theme park business is pretty good.
Mm-hmm.
The studios are starting to crank out hits again.
Yep.
And the streaming business, which was where 5 years ago everyone thought the growth was going to come from, is basically tapped out, I think, at this point, and not really a major source of profit or loss. It's just kind of there.
That's a fair assessment. It is noteworthy to point out on the streaming side of things that they did report a $312 million profit, down from a loss. But you're right. I mean, that profit line is not as significant as what people thought it was going to be from a growth perspective there on the streaming side of things. And I think the other reason why the stock is trending a little bit down today is they're up to 178 million paid subscribers between Hulu and Disney Plus, and they did report that they're going to see a bit of a decline in those numbers for Q2. So it seems like that decline has investors perhaps a little concerned. But there were some other positives that I thought came from this report: the profitability on streaming, the theme parks, and other areas that did okay. The linear cable business continues to be a weak spot. That was down about 11%.
Yeah, big thing, just like looking through it. So if you look at when they were really cranking, like 2018, 2019. So 2018, the 3 biggest movies were Disney, and 5 out of the top 10 were. So this is in terms of annual U.S. box office. 2019, you take a look at it, the top 6 movies were Disney, and 7 out of the top 8
Wow.
The only one that wasn't was Spider-Man Far From Home, and that even Disney owned like a minority stake in terms of how the Marvel deal was structured. 2020, not really a real year for movies.
No.
Let's just skip 2020. 2021, again, this is where they kind of ran into some trouble here. They had 3 out of the top 10, but the dollar values were all much smaller. The biggest one they had was like $225 million domestically. 2022, sorry, hang on, I accidentally clicked on 23. 2022, they only had 2 out of the top 10. The biggest was 436, and the next one was 343. So again, not really reaching the heights they did previously. 2023, again, 3 out of the top 10. The biggest one was 358, and previously they'd been doing like 600-700 million. Last year, okay, kind of a return to dominance. 3 out of the top 4, with 2 of them over 600 million. Yeah, that's the kind of stuff that you need to be able to deliver. And obviously, year to date so far, nothing matters because it's been, a month.
Well, Moana 2, I guess to point out, has grossed over $1 billion. So so
worldwide,
that's fantastic to see there. I'm sure Moana 3 is coming soon.
Have either of you seen the second one?
I haven't, no. I heard it's not better than the first.
Well, so the big thing is they took Lin-Manuel Miranda off the song, so he didn't do the songs, whereas he did for the first. Right. And so I've heard that the overall, catchiness and quality isn't quite the same that it was in the first. I haven't heard any bad things about the movie, but just, hey, it's not quite up to snuff. But the bar was pretty high because the first one is fantastic. Let's talk a little bit about Apple, or Apple as they're more commonly referred to. So China is reportedly going to probe Apple's App Store fees in an antitrust probe. And you better believe that this is connected to the imposition of tariffs from the United States earlier this week. And this is actually kind of interesting just how the two countries are playing off each other. So the United States imposes 10% tariffs on all imports from China. They also removed the de minimis exception, saying that goods under $800 originally were not subject to that. Now they said they are. But we'll talk about the post office in just a little bit because it's all confusing as to whether or not this may have actually been rescinded in terms of that de minimis exception coming back. But the message from the United States is, look, there are 2 real ways that China has grown their economy in the last couple decades. Exporting a bunch of stuff and building real estate. Now, the real estate side of things is already in the toilet in China right now. But, okay, if we're going to impose tariffs on you, that's kind of going right after the lifeblood of the Chinese economy, being able to export stuff and make money off of it. The United States is not a big exporter to China. So the initial response yesterday was, hey, China, slapped 15% tariffs on like a small volume of U.S. goods. The U.S. economy does, if today China said we're not importing anything from the U.S., again, I'm just talking like first order, not like the larger things that it would sound. Yeah, there'd be some companies that have issues, but ultimately the U.S. economy is just fine not exporting stuff to China. It's not a meaningful source of economic growth for us. Instead, pretty savvy here in terms of, kind of how they're hitting back. Hey, the lifeblood of the Chinese economy, it's those 2 things, real estate and exports. Lifeblood of the U.S. economy, it's tech and the stock market.
Right.
Like, that is where the meat is right now. So if you want to punish the United States, you don't impose a bunch of tariffs on stuff that the U.S. is exporting to China, because the U.S. doesn't export enough to China for it to matter. Instead, you say, no, we're going to go after the tech companies. Yesterday it was Google. Today it's Apple.
NVIDIA's been thrown in the mix too.
Correct. So this is what you are going to see here. And it's why, look, China is not in a good situation. It always bothers me when people are like, oh, the Chinese have the upper hand in this because we buy so much from them. The Chinese economy sucks. And if you make it suck more, it's going to be painful for them. China's not just sitting there going, oh, we can do. They're not evil geniuses. It's just they're normal people that just happen to have a government that is really repressive and authoritarian, and generally it's something that I don't agree with, but whatever, it's neither here nor there. They're not super geniuses that are going to somehow conquer the world because everyone else is dumb. Instead, they've had a good run of a couple decades, and they're running into some real issues right now. So this here is exactly how, if I were a foreign country trying to fight a trade war with the U.S. and I didn't import a lot from the U.S., fine, I'm going straight after your capital structure. That's exactly where I'm going, because that's where the meat of growth is for the U.S. at this particular point in time.
Yeah, you're probably talking about 20% of the S&P 500 with those three companies right there, from a weighting perspective.
Right, and this is where, if China really wants to punish the U.S., they certainly can. They can inflict some pain on this, and the question, and this is why this is like an uninvestable theme, it's like you don't have any idea who blinks first on this. It's purely a game of chicken, and there's no way that you can hypothesize who's going to blink first based on more pain being inflicted.
If they pull TikTok, that will get some people pretty upset.
That would. I was hoping we could get through an entire show without talking TikTok, but
now we're even.
Now we haven't. Thanks, I appreciate that. Quick break here. When we come back, we get the trivia answer. We're talking post office.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, who was the first Postmaster General? That would be Benjamin Franklin. Dottie from Wareham, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Dottie. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Speaking of Post, So, in a story that has played out over the last 24 hours now, yesterday, this was, I think, around like 6 p.m., the USPS said that they would stop accepting Can we just restart the segment?
Yeah.
Can you play the bumper again? The U.S. Postal Service said that they would stop accepting parcels from China and Hong Kong. And the reason for this was simple. At 12:01 a.m. yesterday, the Trump administration put in place a 10% tariff on all imports from China. But beyond that, and why they said all parcels would not be accepted anymore from there, previously there had been what's called a de minimis exception, which stated, hey, if the thing that you're shipping is valued at under $800, tariffs do not apply. And so why this mattered is there are all kinds of businesses that are based in the U.S., Canada, based wherever, that don't actually have any inventory of their own, but rather just have a third party handle the shipping direct from China. It's called the term, and look, this can be any business that like sells something but doesn't have inventory in its own warehouses or in any warehouse that it's even handling. It's called a drop shipper. Basically, someone else handles all of that. So, if you were a drop shipper that had your warehouses in China, think of companies like Temu, Shine, things like that. Hey, if you had this de minimis exception in place, which by the way you did, because remember, even before this, there were tariffs on Chinese imports that the Trump administration had imposed the first time around with the de minimis exception. So immediately what you get is, okay, we've got to send this stuff into, so let's say that someone, just as an example, is trying to buy a $10 good from Temu, and it's being shipped directly from Temu in China. Okay, it gets shipped over, and it lands at LAX, and it goes through customs and whatever, we're going to deliver this. Now, you have the issue of, okay, how do we make sure that the claimed value of goods is actually having the proper tariff applied? How do we know, just as an example, that Temu isn't saying, hey, this package has $10 of goods in it when it actually has 20. And this is why the whole de minimis exception generally makes sense, is because there are, the estimates that I've seen are between 1.2 and 1.7 billion packages per year shipped directly from China into the United States. Now, Paul, on a given day, let's say that you were working for U.S. Customs and Border Patrol. How many packages do you think you could inspect in a regular, let's even say like a 10-hour shift, in order to verify the contents and their value?
250 to 300.
So at 250 to 300, remember, let's take the midpoint and say there's 1.4 billion packages that are coming from China each year. For 365 days, that's 3.8 million. And if you're going to do 300, was that 300 a day? Yeah, that was 300
for
a day.
A shift, yep.
You need 12,800 people just looking at packages from China in order to process that volume. Paul, do we have 12,800 people who are in Customs Border Patrol just looking at Chinese packages coming in?
No. I wonder what the whole department is as a size.
So the U.S. Postal Service initially suspended the shipping of parcels from China and Hong Kong. This morning, it was sometime between like 7 and 9 a.m. I don't know the exact time. They reversed course and said, we are going to accept it and we'll figure out how to do this. So couple things that I'm trying to figure out. A, how did they suddenly figure out how to do it when 12 hours before they told everyone, no, we can't? B, has there been a change on that de minimis exception that we just don't know about yet? And it's going to come out in an executive order today where, hey, we're reinstating the de minimis exception on this.
That has to be it.
That's the only place
how
I
else
can
could
get
you
to,
resolve that?
Because otherwise I don't know how you can enforce this properly. So we'll see if we get any further news on this, but it's been a wild 12 hours for the post office, and I don't know. We'll just have to see kind of how it goes here.
The calendar has turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Paul, we got the JOLTS report yesterday. I'm sure you and Mike covered it. But one of the key things there is that, not even a key thing, look, it's the same thing Jay Powell said when the Fed meeting happened a couple weeks ago. If you've got a job right now, you're generally pretty safe. If you don't have a job, it's pretty hard to get one.
Yeah, I think that sums up really well what we saw with the JOLTS report yesterday. Just to focus on this ratio of open jobs to available workers, because that's one that's pretty easy to sort of break down. Back in the peak of March of 2022, we reached this point in the United States where there was 2 jobs open for every 1 worker that was looking for a position. So that was at the peak of powers in terms of the labor market. The ratio has now, as of this recent report, declined down to basically 1-to-1, 1.1 to 1. Jobs open to available worker looking for jobs. We posted about 7.6 million of jobs available in that JOLTS report yesterday. And it speaks to your point, Chuck, where if I were asked to categorize the labor market at this point, it is not in a troubled state, I wouldn't say. Unemployment has been at a pretty static level for the last couple months. You've had limited layoffs, but what we have seen is it's nowhere near as hot as it was in some of those prior years. The percentages of new jobs that are being hired into the labor market is down to about 3.5% through 2024. It was higher, a peak of about 4.4% back in 21.
Let's take a quick break here. When we return, we'll do a little bit of Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Before we get to Stack Roulette, Paul, the S&P has just now turned positive. It's up 0.6 points, or 0.001%. But, again, just a really boring day overall, even though there's a lot of churn happening under the surface in terms of where different sectors and different companies are moving. But from the top down, it looks pretty quiet, but there's a lot moving underneath the hood. What do you got for me?
Super Bowl is coming up, and the American population will bet a record $1.4 billion on this upcoming Super Bowl. In particular, what stood out now is we have about 38 states where it is legal for sports gambling, about 70% of the adult population. And New York has really overtaken Nevada as the top market in the space. I mean, obviously from a population size, you can understand it, but what we've seen in terms of the shifts in betting over the last couple of years is that New York is really the preeminent market from a sports gambling perspective, where sports betting for this Super Bowl will reach up to $183 million in New York alone, followed by another $170 million from Nevada and $147 million from New Jersey. So it was a number last year that came in, I believe, at $1.25 billion, set to increase even more this year. You still have got 12 more states out there for legalization, but it's become a huge market out there.
The fascinating thing about the legality of sports betting right now is when you look at the states where it is not allowed, California and Texas don't allow it. The two biggest states in the country do not allow it.
Too, yeah.
And so it's kind of remarkable that you're getting these numbers despite those two not being involved. I like having seen this play out for the last several years in the Northeast now. It's clear to me that we have a real sports gambling problem in the United States. And it's not to say that I think it should, go back to being illegal. I don't believe that, but I think we have some real issues with what I'm seeing, particularly, I mean, again, like if you look at the data, it's mostly young men between the ages of 20 and 30 that have the biggest problems here. And there are not nearly enough resources dedicated to either A, supporting them, or B, basically like cutting them off if they are ending up in debt to legal online sports books, which is what you're seeing at an increasing rate. So there's a real problem on that side of things. I don't know what the answer to it is, but I've seen it popping up more and more with people either in my life or adjacent to my life that are ending up in a really bad spot because of sports gambling, and I don't know what we're going to do about it because it is a systemic issue at this point, from what I can tell.
Yeah, usually, you have legalization and then there needs to be a correction in terms of the promotion and some of the guardrails around it, so we'll see.
I want to talk a little bit about Waffle House. Waffle House announced yesterday that they are putting a 50-cent per egg surcharge in place due to the price of eggs and what that is doing to their business as a result of the bird flu that is going through the United States right now. My general rule of thumb is when Waffle House does something, it means it's really bad. The reason why, and not that like Waffle House is doing it, but hey, it means there's a real problem. Waffle House, if you're not familiar with them, they're mostly located throughout the southeastern part of the country. As a result, they have a ton of experience dealing with hurricanes, namely. And one of the ways that a lot of people who are trying to see the impact of a storm measure the impact is through whether or not Waffle House closes locations in various areas. And the reason why is Waffle House has, like, literally, I'm not making this up, they have like a hurricane preparedness center where they help to direct their operations. And basically, they are one of the last stores to close in the event of a hurricane and the first to reopen because they're so good at it. And so when Waffle House says, hey, we've got a problem with the price of eggs, I look at it and I go, okay, we got a problem with the price of eggs.
Yeah, I mean, particularly you'd think I don't know the details of the resources on their egg front, but you'd think that they have a lot of supplier relations in terms of the amount that they're purchasing on a yearly basis. They have as much access to eggs you would typically as any other institution in the country just because of the amount of consumption that occurs there. But like you said, it absolutely is an issue from what we're seeing at grocery stores, where we're at back in December, it was $4.15 for a dozen eggs. We now sit wholesale at $6.70 per dozen as of January 31st. So it is a huge issue. You're seeing in California eggs almost exceeding $9 for a dozen, and between $7.25 and $7.63 for the Midwest and New York.
Do you know what states produce the most eggs?
No.
Let me back up even before that. in 2023, which is the last year that I have data on this is from the U.S. Department of Agriculture. How many eggs did the United States produce in 2023? Either of you?
6 billion.
6 billion?
Yes.
This is impossible. Like, you're not going to get it right, but I'm just curious where both of you end up going.
500 million?
109 billion.
Wow.
109 billion.
I was closer.
Yes, you were.
You were closer. Do either of you have any idea which states produce the most eggs?
Georgia?
Georgia, I think it looks like, is top 10. They do about 5 billion a year. So 5% of U.S. egg production comes from Georgia.
California?
California's 3 billion. The biggest ones, I'm eyeballing this.
Texas?
So Texas is about 6 billion, 6.5, so they're up there. The biggest ones that I'm seeing, I've got Iowa at 13. I've got Ohio at 11. I've got Indiana at 10. And those are your biggest ones. Massachusetts is an example. Produces, that's 10 billion, by the way. Massachusetts produces 41 million per year. So I had someone the other day come up to me and they were asking about egg prices, and they're like, I don't get why egg prices are high in the Northeast. Like, this bird flu is not affecting the Northeast right now. And the answer is, we don't get most of our eggs in the Northeast from the Northeast. It's like, it's just how it is. I know, like, the whole thing about, what was it? Like, brown eggs are local eggs, and, no, like, there's almost no local eggs that are sold in the Northeast because there aren't enough chickens laying eggs in the Northeast, because if you're trying to run a legitimate commercial-sized chicken farm, there are way cheaper and way more hospitable places that you can do it than around here, is kind of what I'm getting at. But yeah, 109 billion eggs per year.
It's a lot.
It's kind of wild. Think about it, that's a lot of chickens just like popping those puppies out,
It really is.
Do they get any like weeks off or anything? How does it work? Is there
no vacations?
No vacations?
No days off.
They have unlimited PTO.
If they get laid off, do they get severance? I mean, that's hard work, just laying those eggs all the time.
Yeah, he's sitting.
I guess. Don't you get bored?
Yeah, you're a chicken.
All right, another day, another egg. Here you go, Jimmy.
I'm a chicken.
What I didn't realize is, and this is in the piece about the eggs, is that the U.S. only imports about 15% of its food supply from other countries. That was news to me. I would have guessed a higher percentage.
It's mostly on the produce side.
Yeah.
Yeah, it's mostly on and it's mostly in the winter, when you can't produce it in the Southeast or in California.
Yeah,
so,
right.
yeah, it's most of the food is produced domestically still. And the amazing thing about that, I go back to this stat over and over. In the 1900s or 1910s, we had about 7 million people domestically that were responsible for food production. Today, it's about 1 million people. So the population has obviously grown exponentially over that time. But we've gotten so efficient with the technology that we're using, 14% of the workers to produce many multiples of the amount of food that we did 100 years ago.
It's probably only going to get more efficient with some of the technology stuff that's rumored.
And this is why I push back on some of the stuff where it's like, we want to, push back on automation in ports and things like that. No, don't you want to be able to, feed your people with less work? Don't you want to be able to have more goods with less work? Isn't that the whole promise of technology? And yes, we need to figure out how to make sure that the impacts to families that lose jobs because of new technology aren't too big. But you want progress.
Gotta innovate, yeah.
I don't want to be sitting here like, hey, we can't use drills on the job site because then we need fewer carpenters.
We need to keep typewriters. What? You can't, you gotta innovate.
I'm glad the Carpenters Union didn't say no drills or no power tools. That would have been bad. They realized, no, this helps us do more. Let's take a quick break here for the rest of the day. We'll see you tomorrow on The Financial Exchange.